Yeah, so let's take a look here. So you can see on this larger intraday time frame in the chart in the lower left corner, this is the yen, right, against the dollar. We can see that we've had a pretty big drop in price here. Not a huge drop in price, I shouldn't say pretty big drop in price. We've had a drop in price from this area and now returning back to this area. So if we come down and take kind of an X-ray snapshot of this area on a smaller time frame and draw our supply in, sticking to our rules, we're going to take the top of the wick and this area right here, snug up against the candle bodies. Okay. There we go. That should work. Okay. Just capture the chart for you again in case you missed it. So we see that the yen, and it could certainly pop back up here, but is this an opportunity we want to take? Well, we've got the two things we were looking for. Let's talk about the positive side to this. We've got a supply level, the origin of a drop in price right here. We put our lines in just like I explained a few minutes ago, right? Creating our supply zone. And price is piercing the upper Bollinger Band. Okay? So typically that's a pretty good opportunity right there. Okay? So the downside to this one, and again, every time you find an opportunity, you just run through the pros and the cons and make your decision. So the only downside to this one is if you look to the left, you see to the left of this is another thing that will help you quantify and qualify key levels. If you look to the left of this box, you see all the trading activity? See how there's lots of candles in here? Tons and tons of activity, hours of trading. Okay. One of the other odds enhancers we look at is time at the level. Okay. You'll find that your most quality supply and demand levels, right? Price spends very little time at those areas. All right. Okay. So price spends your best levels. Price will spend very little time there. You won't see a lot of trading activity in those areas. And the reason is this: keep the logic real simple. Don't take my word for it. Just think it through. Right? If supply and demand is out of balance in a big way at a price level, right? Price is going to spend very little time trading there. You're going to get very few transactions. In other words, the more out of balance supply and demand is at a price level, the fewer the transactions you're going to get at that level, right? Therefore, your most significant supply and demand levels are going to have very few candles in them, not hours and hours of trading here. So I would not be surprised at all if prices drop from this level, and maybe they can come back up here. But I wouldn't call this one of our big key levels. Okay, this wouldn't be a big significant level for us. Probably a much better level where we saw fewer candles would be this demand area just sitting just below. Now I know price is pretty far from there, but we can keep this level in right here. Okay. All right. Identifying where the sellers are above, where the buyers are below, and let me grab this chart one more time for you. There you go. Let me just catch up on some questions here. Yeah, so Junaid, I see what you're saying there. Yeah, so just make sure that you're taking the levels that are pretty far out on the curve, okay? Because if you're taking levels too close to equilibrium, then price, even though price will go in your direction, sometimes it'll go through a little bit. All right, so the two things that can help you there are focusing on price levels that are a little bit further out on the curve. Those are the levels where most often price just touches those levels and turns, right? And then the second thing is, I don't know if you're just trading spot Forex or Forex futures, but there is a difference there as well. Okay.